just there was a little bit of emotional trading towards the end of the week with that M3 setup. I think it was with the dollar pound, and it kind of wiped me out. It wiped me out as far as profits that I made during the week. So I think I kind of made the call to stay out of the market. I mean, it was already the weekend, so I mean, I had time to relax. But I mean, just small stuff like that I need to work on, like not, worrying about stuff like that. That's, part of the learning process, and that's it.
All right, great. Anthony, your turn. What was your challenges pretty much last week?
Hey, Reynaldo and everyone. Can you give me a second? I'm trying to connect, switch to microphones right now.
Okay, great. No worries. Anne, please, your turn.
Challenges last week, nothing really. Just been a successful week, so trying to to calm down and not be overconfident. That was it, really.
All right then. So, in other words, it's your shout next week. We've got a new member, John. He actually started to join us today, so welcome, John. Angie, what are the current challenges you're currently facing?
Challenging. I haven't done any trading. I'm very jealous with you all with the trade alerts. I'm very jealous of that. I'm currently dealing with my health. I'm still getting headaches, so I'm focusing on that, and then slowly getting back to trading.
Okay, Stefan, your turn if you're online. All right, probably nothing as yet. Okay, what are your goals basically for this week then? Let's start from you, Jason.
Basically, just keep trading. Just keep focusing on what I have been, and just keep learning from all, every trade. Continue to learn.
Okay, gotcha. So just 1 second, please. All right, sorry about that, guys. Okay, now that we're back, let's go check it out. All right, Stefan, microphone is working. John's basically how this works is mainly on the Mondays for the first hour. It's whatever challenges the trader will have. And we're going to look into that, and we'll focus into that, and maybe perhaps some of or the rest of the group will also learn from it. Okay, in terms of successes, let's start from you. And what was your success pretty much last week?
USD JPY and Euro Yen, they're the successful ones. There's a few successes. One as well was the SPX 500. My issue last month, or basically my issue previous months, is that it's I find it difficult to take profits. So with the SPX 500, I saw it at level of demand, and when it went down, and took the profits, and I was happy with that. So I'm getting better at taking profits from the market at the moment. So yeah, so that was it's pretty good. It's been very good so far.
Okay, great. Because sometimes, yes, it's true. Yeah, the challenge is actually when you're making money, and and the greed factor, which actually we spoke about that last week. And excellent, good job, Harry. What are your current challenges at the moment? If there is, what would that be? If there isn't, what was the success in terms of what you had pretty much last week?
Um, Challenges is still an addition to what we discussed last week, when to start increasing the position size now. I've got a fair few wins up my sleeve from the last couple of weeks, so now it's really starting to decide, is it time to put the hammer down, and am I prepared to extend myself to that sort of risk levels. In terms of like trading challenge, I was looking at AUD USD yesterday afternoon, sorry, and it gapped down and didn't retrace any further, and I set my limit entry a little bit too low, and it didn't retrace to that level. So I just found myself in a situation where, when do I wait for a retrace, or when do I pull the trigger and just jump right in? So I found myself just sort of like a deer in the headlights. Didn't know whether to wait for the trigger to be taken or to just jump right in. The successes, I've had quite a few, but the most important one, I won't talk about trade successes. I think the big success for me was just following, and more importantly, executing the plan. I'm pretty good starting, getting into, but I've got the history of having a poor finish, and staying in the trade and watching it come to completion, I think, was the biggest success for me.
Okay, good. Nice. Actually, that's a good one. Let's focus on the AUD. So I think it's a good one where when's the time to hop in, when's a good time to hop in. All right, I'm going to change the presentation on your end, so if you could just show us, please, on as an example, and we can actually really talk about it as a live case, or as more of a case environment. All right, whenever you're ready, Harry, let us.
Just bear with me.
Not a problem.
Yeah, just bear with me till I get ready. So just bear with me.
Okay. All right. Well, while Harry is doing that, Lolita, what are your successes and what were your challenges pretty much for last week?
My success was the trade with the dollar yen. So that was successful and did very well with that trade. And my challenges, I don't know if I really had a challenge. I think I was on such a cloud nine after that trade, because it did so well, that I didn't do anything else. I did get into that pound dollar, which went the opposite direction, but that's just the nature of the beast. So I don't look at it as a challenge. It just, I lost that one.
All right, cool. As long as you followed all the rules, and that's all that matters. And well done. Excellent. Alrighty. We have Anthony. What were your challenges and what were your successes as well for last week? Thanks, Lolita.
I had a very good trading week overall. I'd say my major challenges is I'll be needing to, or one thing I feel like I could work on is maybe, I guess, keep a better awareness of the news items that are coming up. That's an area of improvement for myself. So I'm going to be I'll be doing a better job at keeping track of that and filling out my trade report. Successes, I had a very successful trading week. I was very happy with my results, and I think my major success is actually with M3 method. I haven't really been using that too much in the past, but I'm starting to trade that, and I'm seeing a lot of success with that.
All right, beautiful, excellent. Yeah, it seems like everybody, really made good money pretty much for the past few weeks, which is great. It's good to see. I was just telling you pretty much, Jason, today, as long as everybody is making money, it'll make me happy too. And that means you're doing something right, I'm doing something right, and we're all doing something right pretty much as a group. All right, so whilst Harry is still doing into that essence then, oh, there he is. He's back. Okay, let's discuss that, and we're going to talk more about the position size calculator.
Okay, so this is AUD. I'll just focus on yesterday. So yesterday, Monday here in Australia, so that's from the weekend. It gapped down, came down and retest 1.350. So around these levels, we're looking to enter to go long. So we'll go to the lower time frames. So around this period. So I was looking, dropped down, I was looking here. So I was looking for it to retrace a little bit further down when I actually saw it to go into a long position. So I went to the lowest time frame, the 1 hour. And after this price bar, which just after 10, so I saw it, and it was doing this. So it was just ebb and flowing over the last couple of hours. So I was trying to get around 1.6, so around these lows here, and it didn't retrace down this far. And then, as you can see, going through the hours, and then 8 o'clock my time, and then off it goes. It's just shot off up to 1.4. So around this period here, was decision time. So I've got my limit entry in to go in. It never retraced. So my decision was, do I get in now, just all gun ho, or do I wait for the retracement bar? In this example, it never came. So I'm just wondering, so when do we decide it's not going to retrace anymore, that that's had enough, that it's going to go, or I'm not too sure. It was just a situation where I didn't take action, or I didn't know, was I being impatient by jumping in now and then catching it, or should I be, leave the limit entry as it in and then let it get hit to go in? I wasn't too sure. And I don't know if I have this trade again. It's all very well in hindsight, but I'm not too sure what the trading plan would be if I just jump in around 5 o'clock, maybe around the UK start session. I'm not too sure.
All right, great. Well, let's. You got 10 grand, Harry. I can give you the answer. I'm just joking. Alrighty. Let's start from you, and actually, who's on the top? Angie. No, sorry. Yeah, let's start from you, Angie. What would you do? Let's see. What answer will you give Harry? I'm just curious on what, in terms of what feedback you could give Harry. Hello, can you guys hear me? Hello?
Yeah, loud and clear.
Okay. Yeah, I can hear you.
All right, we'll start from you, Angie.
Hello, can you hear me?
Yes.
Can you hear me? I missed the question. I was on the phone. I'm sorry.
Okay, let's switch. Anne.
Yes.
Can you guys do me a favor? When you're in a class,
actually,
hang on, just
yep.
1 second. Yeah, it's very imperative because if you miss one thing, some of them could be very valuable. So I highly recommend that if you're in a class for 1 hour or 2 hours, no phone calls, no emails, no Twitter, no nothing. Just be engaged as much as you can. Take notes as much as you can because these are really important stuff in the especially in the marketplace. Alrighty, let's start with you, Anne. Your turn.
Okay. Interesting enough, I'm actually in this trade as well, and I was also looking at the same area where Harry was looking at. So I did my multiple time frame analysis from daily to the 1 hour, 1 hour being the best chart to look at. And for me, what I can see there is that the price is already stabilizing. So buyers are actually already supporting after that big drop on the red bar there, and after that the buyers took control. It's already saying to me that buyers are in control, and then buyers are already supporting that price area around about the 103.68, 103.70, even 75 area, and already 1, 2, 3, 4, 5, 6 bars in a row. They don't want to drop further that. So to me, it's telling me that, hey, I'm not dropping anymore, get in. And so I got in. I got in actually at 103.78, which is still not a very good price, but still one of the best prices. And I'm in the money today.
Okay, cool. Nice. Did everybody get that from Anne? All right, good. All right, Anthony, what would you do? Hello, Anthony. You're there. Hello.
Oh, sorry about that. I was on mute. So everything that Ann said is true, but personally, I'm taking a look at this thing, and actually on the M3 method, it is an indication to go in on M3. So I think I mean, for me personally, it would be kind of a little difficult. Like, I actually looking at the higher time frames as well, and just seeing how the price pattern, the way it's moving. On the 4-hour time frame, it looks like the area that you were taking a look at, it really makes a lot of sense to go in there. Let's see here. So it was on the yeah, and it looks different on my screen for some reason, but 4-hour time frame. Looking at that one, on my screen I see 2 stabilization bars, so that to me says that it's generally a good time to go in, and also it's in a very strong demand area historically, but I think for this one the M3 confirmation would have been the thing that really would have pushed me to go in.
Which time frame in terms for you to push in on based on an M3 method? Because on the 4-hour chart, there's nothing dictating to go.
Yeah, on the hourly, if I'm not mistaken. So right, yeah, you see in that area right there.
Okay, so there's another one. Great, excellent. Jason, your turn, please.
Are we talking about for M3 or for M1 now?
Anything. So what will you
well, like
tell?
For Harry's trade, I would just throw a fib retracement on there to establish targets, and then once it hits those targets, you can trail your stop up to those target levels, and then stay in profit. You don't have to enter or exit the trade because those fibs are for like a decision to make. Do you exit the trade or do you stay in? And that's the call you got to make based on the movement of those candles and with price action. And so what I would do then is I would just trail my stop up to the 62%, and anything above that is just extra profit.
Okie dokie, anything else?
As far as what I've seen, you mean as far as what's on the screen right now?
Like in terms of his challenge, right? Harry's challenge is he doesn't know, he's not too sure whether to hop in or not, right? Based on what he was saying. What he was saying, he didn't want to retrace, hence, so he missed the move and he didn't go in.
Well, you look at that level of demand that that real long bearish candle made at 9 o'clock, and then the bullish candle that basically was divergent to that, and it had just as equal strength going up as it did going down. So that alone to me is an indicator that bulls were clearly in control of that candle, and then it started to establish a higher high as well. So that could potentially be a reversal of trend. And so looking at those candles was about 1,300 or so, right around there on that low on that bearish candle. And so that's just indicators looking at price action on potential movement of the price.
All right, cool. Thank you. Lolita, your turn, please.
Based on Harry's trade, or the one that he was looking at as a potential trade for M1, when those dojis start appearing, I probably would have been paying attention to what's going on with the news to see why there's an indecision there, because it's in a consolidation mode, a law 1, and I would have entered the trade if I felt that it would continue to move upward, and that would have depended on what news are they waiting on. So was it a high impact or a medium impact, or what were they meeting on? Was it Bernanke speaking? That type of stuff. And then looking at that real bullish bar, it is an indication that it is an uptrend.
All right, cool. All right, thanks everyone. Alrighty. So at the end of the day, when we're trading, what is still is are we trading based on certainty or uncertainty?
Uncertainty.
Certainty for sure.
Absolutely uncertainty, right? And actually, if I was Harry, actually I will fail Harry like there's no tomorrow. Why is that? What is on his screen?
Too many indicators.
Why is that? What causes for human beings sometimes to cause
Hang on,
uncertainty?
hang on. Stop. I put this chart on for Anthony because he was talking in three. When I initially showed this example, I showed you clearly
Yeah.
no indicators.
All right, perfect. Okay, sorry, but in terms of
Yeah,
that,
that's right.
never confuse 2 and 3. Okay, so here is now the key in terms of self-awareness, right? As well, I was just curious in terms of what you guys would say if you're gonna give feedback to somebody else. What would it be? Because in hindsight, everything looks good all the time. So, when you are listening to, so listening is actually very important. Listening as well to the words and what that person is dictating or stating, because words have meaning, and within that meaning comes to an internal thought. And part of that internal thought will be dictated part of the emotion or whatever physiology or whatever feelings. Part of that emotion, either positive or negative, which could create a certain belief. So when somebody, like say for Harry, for example, is I am not too sure, I wasn't too sure, what does it mean?
He's not confident with what he sees with this pair.
All right, cool. Finally, somebody answered. What else? Let's go, guys. This session is for you, not for me.
He still, if he's not sure, perhaps he still needs to look for more evidence. And if there's enough evidence, then it should pretty much, depending on how much he's willing to risk, it should be okay for him to go in.
Okay, cool. What else?
Maybe just a little fearful of the unknown.
Excellent. Fearful of the unknown. What else?
He needs to, I guess another thing too is maybe define the intent of the trade.
What else? Can you guys do me a favor? If you're not speaking, would you mind muting your end, please? All right, sorry about that. Anthony, can you say that one more time, please?
He needs to figure out the intent of the trade.
Okay, intent of the trade. Okay, what else? Who sometimes have this internal thought or internal saying within yourself when you're trading? I am not too sure. I don't know whether we should go in or not. So what does it mean to you when you say to yourself, I am not too sure? So in the first place, when you say, I am not too sure, then obviously you're not certain. Okay, so when you say this to yourself, that means you're not confident. Maybe perhaps you need to look for more evidence. You are fearful of the unknown. Maybe the intent of the trade is not in sync to your either profiling or style or whatnot. So what else?
It's possible that it can be all of those, but it's also possible that it's just what he said. Maybe he needs a better understanding of when to enter, and maybe he just for whatever reason there's a missing piece there.
Okay, needs a better understanding or finding a little more evidence perhaps in order to be confident. Because in order to be confident, we need some form of certainty, correct? Some form of security in order to be confident into something. Regardless, it will be trading, regardless, it will be your job, it will be your sport, your career, and so forth, right? You need a better understanding because of the uncertain events. I mean, you walk down the road, are you sure that you can probably cross the road securely or with certainty on a busy street? You know, here's something freaky. One of my wife's friends was just jogging out of nowhere. Early in the morning, there are no cars around. And out of nowhere, in the curve in the corner, boom, she got hit by a dump truck, garbage truck. So, you know, is there certainty in life? There is no certainty in life. But unfortunately, when things happen, something bad happens in the past, and boom, it triggers our internal belief system, I mean, our limiting belief system, and part of that out of nowhere is like, oh, I'm not too sure now whether I should go in or not. Because there is always going to be an attachment to something, and what is that something?
Fear of losing.
Okay, fear of losing. And what is still that attachment?
Attachment to money?
Bingo. So the money aspect will always going to be the factor. That's the attribute on why people will always have fear in trading, especially when they're trading their own money. So if you have attachment to money and you have that fear and you're not too sure, it will trigger that, right? So totally guarantee you in this room everybody has the same problem in some form, shape or another. But what ticks us though as traders to keep trading? Why are you here? Why do you love to trade? Because it's easy to just say, screw trading, stuff it, I'll do something else.
Because you want to be successful and you want to reach that root goal that you're looking for.
Well, success is always going to be there. It won't disappear. I mean, we can do something else aside from trading.
It's the best way to make money.
It's the best way to make money if you make it as a business, right? If you make it as something like, I know everybody in this room loves to trade. Okay, so in other words, how can we eliminate this scenario? How can we have more certainty in trading? How can we have more confidence in trading? Aside from the education that you guys are getting, the amount of workshops, pretty much classes that you guys are attending, right? So what else there? How can we eliminate this?
Define how much you want to lose.
Bingo! Okay, the risk component is important. Hence, that's why we always focus on risk management. Part of that is how much are you really willing to lose? Who defines their risk first before identifying their profitability?
I do.
One. Who else?
I absolutely do.
Okay, two.
True.
Who else? Three. Who else?
I do.
Four. There's 10 people in the room, actually, because 2 has been doubled, right? So 9 people in the room. 1, 2, 3. With exception of John, pretty new. 3, 4, 5, 6. Okay, so if you define on how much you're willing to lose, how many in the room take full responsibility based on the risk that you're willing to take?
I do.
I do.
I do.
Excellent. Everybody in the room should be in that scenario, right?
Yes.
Okay. If you're taking the full responsibility part of that, then what will happen? Then automatically it should eliminate the uncertainty. True or false?
True.
So responsibility plays a very big role in trading. And unfortunately, there's always a price to pay. There's nothing for free. Freedom has a price. Freedom in trading is the biggest ATM machine. It gives you a lot of freedom, but in return, it also has a big price that you have to pay, because part of that is that what you're trying to pay is the form of responsibility, the uncertainty of events, being responsible, being patient, being committed, and so forth, being confident, being on time, following your plans and preparation and so forth. So there's always going to be a price to pay. In other words, the action that you have to take, right? Okay, cool. Now, if you add that all together, imagine now the attachment to money. Will that eliminate that?
Yes, it will.
Yes.
Nice. With a predefined stop, what is the worst case scenario within each and every trade? What is the worst case scenario?
Losing the
Use
money.
that amount of money.
Your set defined amount.
Bingo! Losing the set defined amount of money that you are willing to risk. Right? Very, very important. Which now then will lead to, in terms of that, what other evidence can we find? Here's a very important factor. Yes, one, basically most of you dictated the bulls were in control. As well, the lows are always going to be very important in trading. You need to look at the lows, and part of that, reading the lows will identify as part of a demand or in terms of a buying perspective, right? And notice how the lows didn't really want to go below certain lows. And what are those lows? That low and that low, right? Didn't even want to go that low. Hence, this low is lower compared to that. That low is higher compared to that. But when the price is stabilizing and creating new lows, look at this. There's an increase in the low number. So in other words, they're really supporting this price. Buyers are really supporting this price. Uncertainty, 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 uncertainty. 4, 5 uncertainties in a row with a big bullish one. Nice big gap, right? And then you define your risk from 67.50. I mean, come on, 15 pips to 20 pips that you're just going to lose. If you're not willing to take a risk in trading, as part of that is having a big set of balls, right? You got no nuts, nothing will happen to you. Okay, risk is very important. And the reason why I'm saying is because it's funny, like I love to sometimes, if I meet traders, and sometimes traders who used to trade them before, and you talk to them, and you're like, oh, dude, man, you have to have a big, set of balls. You need to have that courage. If you don't have that courage, someone will take it, and then out of nowhere, you miss the boat. Someone will make $1 million while you make $10,000. So, in trading, you need to take that risk, especially knowing your calculated risk. Because if you cannot press the trigger, the price will go without you. It seemed like you basically missing the train heading towards the work, and you have to wait for the next train, and you're late. That's what happens. The market will go without you, whether, what different color or race that you're from, or depending on where you're from. You can have the most money in the world, but you don't press the trigger. You might have the best system in the world, but you're fearful. You cannot press the trigger. You're done, right? So hence, that's why it's important to have the calculated risk, and all at the same time, you need to take that risk. And the worst case scenario is that loss, 15 pips. If you can't say to yourself, I'm not willing to take that risk, then easy. The easy answer is do not trade. If you miss the boat, then so be it. There's no shoulds, the coulds, the woulds, or no regret, because at the end of the day, it's your responsibility. You don't take full responsibility, you're finished. Or in terms when I say you're finished, the regret will happen, and the same terminology, you snooze, you lose. You know, if you didn't get in the trade like the euro yen, the pound yen, or any type of the yens when it's time to press the trigger, then, you know, actually for the past few days I've been hearing from other people like, oh yeah, you see the trade, man, I can't believe I missed it. I said, well, you don't take action, you don't get nothing. It's like someone who basically will just keep on meditating without action, and your meditation won't work, right? And you know, it's like coaches also would say, a goal without a plan is just a wish, right? So in terms of your planning, when you see the plan, the intent, what is the intent, what is the purpose? Part of that, of your planning, is your risk. And then you can see there, well, you know, very, very clearly, the low is not going below that. Cool, they're supporting that price. There's a big range of a demand level. And if it doesn't want to go to the retracement level, and here's now an important key too, the word choice is a very powerful word. What does it mean? Let's start from you, Angie, because everybody has a different meaning, right? What does the word choice mean?
It's what I decide to do. It's my decision, and I'm responsible for it.
Excellent. Okay, cool. Alrighty, Anne?
It's pretty much the same as Angie. Yeah, it's my own choice or my own decision, and yeah, I'm responsible for it.
Nice, Anthony?
Yeah, it does mean responsibility to me and decision making.
Cool. Alrighty, Harry?
Making a decision.
Making a decision, Jason?
Yeah, I was going to say all those things, and also it's a form of initiative to take action.
Okay, needed to take action. John, what is your definition of choice?
I think his mic's down.
Oh, okay, no worries. Lolitha?
You have an option.
You have an option.
It's an option.
It's an option. Stefan, if you're making a decision. Tony, what does the word choice mean to you?
Yeah, to me it's a choice to take the trade or not to take the trade.
Perfect. Okay, excellent. Okay, so in terms of definitions, you guys have the all definitions, but there's a big difference between the word decision compared with the word choice, right? See, decision comes from the Latin word decidere, to cut, to slice. Decision is making pretty much reasons why not to. So, decision actually, D-E-S-I-S-I-O-N, cool. It is a part of your process in terms of analytical, logical judgment and making reasonable analytical judgment whether you should do it or not. Making a choice is either you do it or you don't. There's no reason behind the thinking. You're making a choice. Either you do it or you don't. Either you press the trigger or not. Yes, in trading, you're making a certain decision process based on the analytical component where you're analyzing, finding enough evidence, and part of that of your decision is to make a choice. Either you press the trigger or you don't press the trigger. So the choice component, choosing, is actually very important. So if your plan and your rules, your set of rules dictating that if it is not going to come or go to my area of the price that I want, then so be it. If you take full responsibility and you say if it doesn't go for it, no problem. I can move on to the next trade. In other words, yes, you're taking the consequence of part of that, right? Part of that act. However, if part of your decision process you didn't make a certain choice that regardless of what happens based on your rules and you didn't want to trigger, you didn't press the trigger, and this is where the regret will come in place. Why? Because you're not sure. There's no certainty. So they go hand in hand. When you have certainty, you will make a choice. When there is no certainty, you will make those decisions, those reasons, whether you should press the trigger or not. Does that make sense, guys? And remember, your choices lead to your destiny or where you are at right now. You choose to become a trader because you choose to. You can choose to be an athlete. You can choose to have different business. You can basically choose trading as a form of hobby if you want to as well. So choices leads or creates your own destiny. For where part of your choices, you step to the left, you step to the right. Okay? And you step to the right, you didn't make that, and hence it's a learning environment. Trading is always going to be a learning environment. Okay, now in part of the lows, and then we have established, we know our risk, you make a choice, easy fixed, and even if this goes through, and if you're a type of trader who wants a little bit more certainty, there's a nice breakout, and you're going to say, well, 70, what is the closing price at? 77, 7 pips, who cares, plus the spread, 9 pips, 10 pips, I will enter. Worst case scenario is additional 10 pips from the point of the stop loss. Are you still getting a best price? Absolutely. You're still not too sure about it? Then you go to your different methods. And then all of a sudden you go through, okay, based on the M3 methodology is breaking out at 8 and 10, I'll wait for another one, bingo. All right, I'll enter. Why? Because you now have more evidence and you feel more certain, so certainty in terms of the way how you're trading. But on a methodology one perspective where you're just looking at price alone, remember the market actually talks to you. When you're with the marketplace and you listen very, very carefully, there's a difference between listening and hearing. Sometimes when a person will hear you, but he doesn't actually listen, because when they're hearing, they're actually going from one ear and goes to the other ear. But when you're listening, you are in tune on a cellular level with that person. You're vibrating with the other person as well when you're listening. So in other words, when you're listening to the marketplace, you're with the marketplace, right? So, and hence when through that you see the price, it goes through there, and that's where we are at pretty much today. Okay. Questions? Will that help? I hope you took some notes based on that too. Wow.
No questions for me.
None here.
I have a question. To me, I have a difficult problem. Sometimes I kind of lose the feel of putting a trade, and I tend to make mistakes that way. And then I try to remind myself to double check. Then I become getting a bit more fearful putting a trade. So it's always a balance of putting enough fear when I'm putting on the trade for me.
Okay, yeah, balance is very important. So how do we know when no longer to trade? How can we do that?
Being self-aware.
Okay, being self-aware. What if you're not being self-aware? So what processes can we implement knowing when no longer no longer that you don't have to trade? Especially in the situation where if you lose 2 in a row, 3 in a row. When do you know when to stop?
You have to analyze why you're losing.
Okay, one, analyzing the way why you're losing. What else?
When you're not focused.
When you're not focused, what else? So what processes can you implement as a trader that when you're losing 2 or 3 in a row, that it's time to stop? Yes, being, self-awareness is the key, right? But what process can you implement in order to have that self-awareness though?
When my initial assumptions of the market is wrong, then I will stop.
Okay, initial assumption. Okay, great. What is an assumption? What does assumption mean? Because in trading, a lot of people assume.
it's guessing.
Assumption is guessing. What else? What does assumption mean? Assuming.
Not
When I
using the
thought,
rules, it's just a maybe.
It's being subjective.
Being subjective. Okay, what else? Cool. Not following your own set of rules, but being subjective. Okay, assumption is being subjective. What else? It's guessing.
Not following the rule.
Not following rules.
Overanalyzing.
Perhaps overanalyzing.
I would say assuming the market is following my rule, but it's not.
Okay, why is that so? What else though? Because if you're assuming following your set of rules, but it's not working, what does it mean when that happens?
Well, you're not in the probability mindset then,
And
because
in
if
the
you were, then
probability.
you would be in tune with the market,
Okay.
successful.
All right. Let's take the word subjectivity. What is subjectivity? Which ties down to assuming, or if it's ties down to guessing. Because even if you have, say, you're assuming that you're following your own set of rules, why do traders still trade subjectively, though?
Because the market is
No,
always
they don't
right.
have the education
Cool.
or the plan.
Alrighty. I'm sorry. Market is always right. So if the market is always right, then what are we trying to push?
Your beliefs.
Bingo, and that's what I was looking for, right? Okay, so in other words, you're pushing your own set of beliefs. Your own set of opinions. Ready? So your opinions based on your perceptions. So you also need to find out whether you're a type of person who's very opinionated. Part of self-awareness is that knowing in terms of your inner thoughts on what challenging part is to think actually and to be aware on a second-by-second basis. Whether you're showing your opinion, whether you're being right, whether the ego is coming out. Yes, I am right. I'm going to be righteous with this trade. And if we know that the market is always right, then why do we always have to push our inner beliefs then in trading? That means that we're trading subjectively, not objectively. Hence, what I was saying to you earlier is like when the market talks to you. When the market talks to you and you listen to the marketplace, this is when you're trading objectively. You're looking at what the market is actually telling you, not based on your own personal beliefs or your opinions, because you're assuming and you're following your own set of rules, but in actual fact, you're not following your own set of rules. How many people in this room, we have 3 different methodologies and you still combine indicators? You're not following the set of rules of the indicator. Indicators have their own set of rules within their own set of rules. So if they have their own set of rules, then how come you're not following the set of rules? See, you know what I'm saying? So that's why it is imperative to trade objectively. And said, yeah, I'm not perfect. Sometimes I trade based on subjectivity. But a perfect example, when you're at an emotional high, when you're making, say, 500 pips in one trade, this is where you need to know that you have to stop the trade, because in part of your overconfidence, you don't want to get too cocky. And when you get too cocky, the market will kick your butt like there's no tomorrow. The market will humble you, right? And this is where once the market humbles you, this is when you know that, hey, okay, the market, you're absolutely right. I'm going to bow down to you at all times, right? So when we're trading, we trade with the market, not against the marketplace. Because when you're trading with the market, that automatically means you're trading objectively, not subjectively. When you're trading subjectively is when you're going against the marketplace. In actual fact, I was just going through, someone joined, the meetup group, and he stated over there, like, I love trading so much and creating, systems to beat the marketplace. So deep down inside me, I was saying, good luck to you. And the reason for it is you can never ever beat the marketplace. You want to win the market, be with the market. Similar to martial arts, you cannot beat the person who's heavier than you, more stronger than you, more powerful than you. You need to find out your strengths, not your weaknesses, and find the ways on how to beat that other person. And in the marketplace, they're powerful, they're strong, they're energetic, they have all the money in the world. Can you beat them? Hell no. Be with them. So regardless of whatever opinions that you may have with the markets, you need to learn how to play the game of the market. That's the only way you can actually beat them, is being with them, being within their energy. So in other words, if they're stalling, you stall with them. Wait. If they're going long, you have to go long. If they're going short, you go short, depending on the trend. Questions? Does that make sense to everybody?
Perfect.
Thank you.
Yes.
Nice.
Yes, it does.
Did I answer your question as well, Tony? And so the reason why you're having challenges is never assume. Okay, assumption is a dangerous word in trading. Speculation. Yes, the marketplace is speculating. As part of the speculation, we speculate, but we forecast based on our speculation with factual evidence. And what are those factual evidence? Macro fundamental things, supply and demand, price action. Then you have your own set of rules based on the methodology, and you need to follow those rules, but you need to have the confidence in order to execute, in order to follow your own set of rules. You have to believe, and you have to have that own set of rules. Actually, in fact, I love watching UFC or any type of MMA fight, right? The moment there's the reality show, like, the Ultimate Fighter, and whoever wins will have a contract with the UFC in order to fight. Most of the fighters, except if you're an exceptional fighter, you will get pretty much a contract straight away with the UFC. So John Jones, who is one of the best fighters actually in the UFC, who is pretty much undefeated, and he basically was stating and coaching one of the athletes. He said, you're one of the best in terms as an athlete. But the only reason why you're losing is because you don't believe in yourself. You don't believe that you have the ability to do it. So in trading, it's also the same. I can give you the best system. I can give you all the information I can give you. But if you do not believe in yourself that you can execute, you will never execute. So if you don't believe in yourself, because of that believing, you don't have the confidence, it's going to be a challenge, right? So to have the certainty of the future is to have the confidence and to have the trust that you have the ability that you can do it. Hence, that's why only 25% of traders will survive trading in a marketplace, which you are part of the 25%. And the reason why, totally guarantee you, people who went short the euro yen or the pound yen, believing part of their assumption is that it's overbought and they're going to short it. Totally guarantee you they get liquidated like there's no tomorrow last week, whilst you make money on the other end. So you're part of the elite, you're part of the best, right? So to maintain consistency is believing that you can do it though. But if you don't believe that, then nothing will happen. And hence is why I'm here as part of your support system, is to keep pushing you to your limits, that I want you to believe in yourself that you can do it. Not just with me, but anybody in the room. We have a good set of people in this room. If you need help, email me, email the people behind, next to you, people that you know in this room, and because the support is actually very, very important. You can do it by yourself, but people who do it by themselves, I guarantee you, there's no consistency there, right? Because you need to have that team that will support you too in order for you to push to go to the next level. Because just imagine you're doing it by yourself and you no longer have the confidence to do it, and out of nowhere someone comes up to you and go like, "What are you trading, man? Trading is it's gambling." And so then plus you don't know what you're doing. So imagine how the way it will affect you mentally. So automatically it will rock your boat. So imagine if you also have a partner or a group of friends who are very negative, and then you're trying to basically, you want some form of sympathy from someone else because you lost, and then they're going to tell you, they said, you know, dude, you're such a loser, man, you can't even do things right. Like, you know, why keep trading? You're just giving money to the marketplace. So rather than supporting you and helping you out, said, hey, no problem, John, no worries, Ann, don't worry, Harry, you know, go on the next trade. Forget about it. There's always going to be more trades in the future. You missed the euro in, no problem, we'll go to the next trade. Right? We'll wait for the right opportunity, and you'll have the same opportunity from before. So imagine if you have that person pushing you, giving you all the positive energy. This is how you build the confidence. So this is why the support system is so important. And hence, you know, in terms of the elite program that you guys are in at, you know, you guys are having unlimited support as much as you can because you need that. Every person has a huge emotional need, and part of that emotional need is certainty, the security. So if someone's telling you all the time, man, you're such a great person, you're awesome, you're confident, and they keep on doing that over and over again, and you look at yourself in the mirror and say, oh wow, I am that person. And the reason being is because they see the external that's 180 degrees behind you that you don't see. But if you're just basically by yourself and all of a sudden you have a negative system next to you, you know, then this is where you're slouching, you don't have the confidence, people are bugging you, then you go to work, then people bug you more, and then you start to trade, and this is what happens, right? So, you know, like I said, if you have any questions, you need any type of help, email, right? So, especially the elite guys, you guys have the amount of support that you guys can get. Alrighty, any more questions, feedback? What did you learn from this pretty much 1 hour? Let's start from you, Angie. What did you get out of this session?
Be confident and just do it.
Excellent. And?
Listen to what the chart, what the market's telling you.
Nice. Anthony?
You can assess the trade by the amount of risk that you're willing to take on it.
Perfect. Harry?
Yeah, quite a lot bit. Mainly just listening to the chart, to be honest.
Nice. Jason?
Yeah, it's just another example of how the mind's probably the most important thing in your trading plan and making sure that it's healthy.
All right, excellent. John, be consistent, have faith, and lean on your support network. Great. Lulitha?
Listen to your intuition.
Nice. Listen to your intuition. Stefan, you can type it for us, please. And lastly, Tony.
Yeah, I think it will be confident on myself and set the stop, a bigger stop at the swing low. I guess it's my biggest fear.
Alrighty, perfect. Then that's the end of the workshop. Thank you for listening, guys. I'll see you in the next class. Adios.
Thank you.
Thank you, everyone.
Bye.
Thanks, Ray.
See ya.
Pleasure. See ya.